balance between innovation and regulation. Moderated by Jaguar A, Jaguar Lawyers Firm. With Gabriel, Laender, Faria, Cendão, and Maia, Advogados. Vytautas, Karalevicius, Bankera. Dr. Franklin, Cachia, CSB Group. And Wahid, Chammas, Faith Tribe.
Hello, everyone. I'm Jaguar A, and I'm kind of like sick of sitting all the time, so I will be standing, and whoever gets dizzy, just let me know, and I will ignore that. So, what we're going to talk about today is international regulations compared to innovation. And as we all in the panel agree, and I bet you would as well, is that when a company, crypto, an NFT company, wants to get incorporated in order to act actually in the real world or in the metaverse, they need to know where to get incorporated, where to establish themselves. And if you ever went to any local lawyer or regulation advisor, such as Maltese one, they'll tell you all about regulation in Malta. If you'd go to a Lithuanian one, they'll tell you all about the good and bad of being regulated in Lithuania. And if you go to a French one, it will be the same. An American one, it will be the same. And then it's like consulting several doctors, each of which is saying something different, and then you come out mixed of still not knowing where to get regulated. So the best thing you do was either take someone who knows regulations of all the countries, which, by the way, change every 2 months or 2 weeks, or as long as you don't blink quickly enough, or that you build a team of regulation consultants, lawyers, CPAs of all countries, and that is expensive. So the best benefit we're going to be giving you today is we brought over here lawyers from Brazil, from Lithuania, from, not lawyers, but a nicer person even though, from France, and from, well, actually, we also have, I think, can you remind me?
From Malta.
Malta. No, Malta we mentioned already. Brazil, Malta, Lithuania, and France, yes. And I'm Israeli, but I built companies in, it used to be Malta. Very soon you'll hear why this has stopped and maybe is coming back. In Gibraltar, in Dubai, in several of the free zone areas in the mainland, and very soon in El Salvador. So I do kind of like a multinational activity because that's what clients need. They need to optimize their choices every time. So, first question would be, I'm asking my French colleague and friend how it is to take a real life, it used to be real fashion companies who are actually doing real business, actually really selling clothes, the kind that you can touch, and moving over to the metaverse, and what are the banking challenges they face and the regulation challenges they face, and they're in France, so even more. Would you like to take that, Wahid?
Great. Thanks, everyone. So, Jaguar, great intro. We are indeed a very little bit of a different beast here. We've had 21 years of experience in a very highly regulated environment. We have banking relationships, GDPR, we obviously do a lot of KYCs, we have factories, we've got production, we've got designers. Faith Connection is a global fashion brand, but what we're known for is our open source design, which means designers and artists from all over the world participate in our ecosystem to produce fashion items. We tokenized it this past year. And we're coming into regulation very differently. We've had banking relationships for 21 years. People we know, people who process LCs for us, guarantees, payments, salaries, purchasing of materials. And now we're accepting a blockchain payment solution, and we're also rewarding designers with the blockchain. And yet, everything that happens in between is very problematic. Getting our banks to accept that world and that world to accept the vice versa is very, very difficult. And so obviously we're very pro-regulation. We're very pro getting our banks to accept that blockchain is not this parallel universe that doesn't exist in the real world. It does now exist in the real world. But right now, everything we do, Jaguar, is manual.
Oh my
We
God.
interact with the exchange on a personal basis to get money from the exchange to our banks, and then our banks then send to all the other merchants, etc. And it's very difficult.
You say manual in our industry is almost a curse, right? Could you shed a light about what's going on in Lithuania?
So actually, like in Lithuania, I think like they changed their, how to say, the view on the regulation. It used to be number one, like kind of proactive and want to be ahead of innovation. But over the last 5 years, it changed in their perspective. It actually they are having a lot of like workshops and so on with industry players to get the feedback from them and to see how they should be regulated and making it more proactive. But by means like adopting to the industry needs and to make it standardized. Because I think like, and it's not only in Lithuania, I think that everywhere where like regulators are trying to solve, they're trying to solve that there should not be regulatory arbitrage opportunities. Because that's the worst, because when you are saying that like if somebody wants to establish a company and we want to shop for the regulation in which we have, in the jurisdiction in which we have to be regulated, it's kind of a regulatory arbitrage, and I think it's unfair for all the businesses and so on, because in most aspects the rules in general should be the same. Because when you are looking for a better jurisdiction, it's more about small details. That doesn't make the most difference. Because, for example, if you want to be compliant for AML, it's still FATFA regulations who are more or less general all around the globe. And then you're like talking about being partners with banks. You still have to follow more or less the same standards which are global. So.
Did you hear that? This was regulatory arbitrage. We are used to doing trading arbitrage between exchanges and countries. And this is a regulatory arbitrage. Way to go for that. I'll use that. Can you shed a light, Gabriel, about what's going on in Brazil? This is pretty remote from here.
Yeah, in Brazil, we would usually lose in regulatory arbitrage, but that's not the case anymore, at least for blockchain-based services and financial regulation. We've been on a good roll for financial services, and some of the Brazilian fintechs are amongst the most valued fintechs in the world right now. And that's because we've been really successful with market-based regulation. And that benefits blockchain as well. I'd say a couple of years ago, I wouldn't be so sure in saying those exact words. But nowadays, I think Brazil is a very good place to start a blockchain business. And 2 years ago, we weren't sure how the regulations would apply to blockchain business in Brazil, but nowadays regulators have taken a stance. There's a proposed regulatory framework in Congress that is now looking much better than it was a couple of years ago. And so I think Brazil is now a very interesting place to do business in blockchain space. As a matter of fact, in my law firm, we just advised a very big Brazilian fashion group to move into the metaverse. And we're finding it, I would say, very consistent with low risk to do so. So they're issuing NFTs, and they're planning a very strategic move into the metaverse. And we're being able to do so at a fraction of a cost that you would have to pay in other jurisdictions.
Thank you, Gabriel. I was building companies in Malta for several years ago, and it has been very efficient back then. They've had very fair and enabling regulation, and I wouldn't say the best of enforcement. And that has changed. Malta, unfortunately, has entered the gray list of anti-money laundering, but good news for us all, it's about to leave the gray list and get back to the light. So you deal with Maltesian regulations, and that's what you specialize in, Dr. Franklin. Could you tell us more about it and mainly maybe the future?
Thank you for that. So the Maltese experience, especially in the space of innovative technology, blockchain, and virtual financial assets, cryptocurrency assets, started off in Malta at around 2018, so almost 4 years ago. 4 years down the line, Malta wanted to start with a high standard for regulating crypto businesses, mostly exchanges, crypto exchanges. And it didn't want to cut any corners because of the fact that, as we know, cryptocurrencies and crypto assets can be high risk and exotic instruments of investment. However, what happened was that in 2018-19, Malta had this fame of being the blockchain island. And there was a lot of interest coming to Malta, but then the regulator decided to up its game, and it only allowed almost 10 to 15 licenses. I think as well, market players and crypto exchanges were quite surprised by the heavy regulation and compliance aspects. They did not factor in the cost to comply with the regulation, and this kind of backfired with the regulator. So the regulator, because it was becoming too strict, we've experienced some businesses surrendering their license and moving into more friendlier jurisdictions such as Lithuania, Switzerland, and now recently also Belgium. Belgium, for example, and Dubai as well. They created this framework to license crypto exchanges and other crypto services. But as I was discussing with my colleague just now before entering stage, it seems that Lithuania and other countries like Estonia are moving into becoming a bit more stricter, because in the beginning, yes, they wanted to attract more business, but now they've realized that there are too many service providers, there's only one regulator, and the regulator cannot supervise so many license holders. So I think we're going to start seeing a change in other European countries, and also a change in the European regulation. For example, the harmonized market in cryptocurrency regulation, which is going to be harmonized all across the European Union. And Malta is already at the forefront of that regulation, because we've already legislated in line with European standards, if not higher.
Amazing. So basically, if that means that we're strengthening regulations in Malta and strengthening regulations in Lithuania and Estonia, and there are very many strict regulations already in France, and there's now Dubai, and not just Dubai, actually the whole UAE. We have here several areas, such as called ADGM, which is Abu Dhabi one, and we have the FCC, and we have the mainland. In some of the free zone, free trade areas over here, regulation almost doesn't exist, meaning all NFT and crypto companies can come in as long as they're not an exchange, a pure exchange, and they can operate, and they will have very little duties, very little criteria. However, in ADGM, for example, you'd have very strict KYCing, AMLing your customers, and very strict regulations, and then it will take more time and more cost, naturally. So it seems that UAE in general, Dubai, Abu Dhabi, or maybe all the other areas within that, is trying to use that arbitrage and to utilize that opportunity when it becomes more strict in other countries, then maybe grasp that audience of customers and license requests. So this could be a great opportunity, at least for my activity here in Dubai, and for many others as well. Having said that, I don't know yet what will be in the Swiss and Belgium new regulations, but it's probably going to be as strict. So once we agree that it's becoming stricter and harsher all around the globe, and that's a given, we can't take that only as a risk or as a threat. Now let's look at it as an opportunity. What if we as a sector, as we are already, are yearning for regulations? We want that. We want to be considered legit, not because we like paying so many costs and so much money, but mainly because if we are all legit, then banking would be much easier. Has any of you, maybe in the audience, has any of you ever tried to transfer fiat funds from wherever non-regulated country's bank to a very heavily regulated bank. Has any of you ever failed trying to do those transfers? Raise your hands. I won't tell on you to the IRS. It's fine. We all have. The whole industry, exactly. The whole industry is facing that. However, once a company will be regulated, maybe not heavily, but still regulated, and then fiat banked well enough, then there wouldn't be that many suspicions as to transfer funds from those banks onwards to the other countries' banks. So, if we take regulation as a given, now let's see how we can improve that and structure it in what I call an enabling way. So, I'm having a lot of pains from the audience and my clients about what's not working, what's not possible to comply with. But now, let's think what we can advise each and every one of us in our own countries, for our own countries' regulators. What would we advise them to change and to make it well enough on one hand, but enabling enough for the industry on the other hand? I see you're dying to answer this, Wahid. Would you want to take this?
So I'm going to answer the question a little bit weirdly. So Web 1.0 to Web 2.0 and now Web 3. I'm actually old enough to have seen the transition on each one. And every single time we went from one to the other, we struggled with this. So believe it or not, I know this might sound crazy, but paying on a credit card on an Amazon or a Farfetch to buy clothes or any items was extremely difficult at one point and highly regulated, etc. So I really don't have any advice. All I do with my merchants, my banks, etc., is saying, fight me all you want, but you're gonna capitulate. It's gonna happen because we're all slowly and surely migrating onto Web 3, and that economy is just gonna get bigger and bigger and bigger. And the ease of transactions, peer-to-peer, is so compelling. But I don't have a solution right now, except we keep fighting and fighting and fighting.
Suggestion?
Yeah.
A suggestion, maybe? Not a solution. We don't have the solutions.
Fighting.
I like that.
Not a good
Fighting.
solution,
I like
sorry.
that. I like that. I'll give you mud afterwards. Yes, here.
So yeah, actually, I don't think like the regulation is killing innovation because, as you said, like you can just choose the jurisdiction in which is like more freely regulated. But also, I think like that from the business perspective, they have to understand that like there's some regulation which is inevitable. For example, anti-money laundering and so on, and it has to be applied to more or less any business you do, because there are more and more businesses, even outside of the finance or crypto, who are obliged to do that for big amounts in cash and so on. But on the other hand, where regulation might be kind of sabotaging innovations, actually when they think about too much about consumer protection. And actually I don't have a solution now because, let's say 5 years ago, it was easy for me to advocate why there shouldn't be too much regulation, because it's still an experiment and only very tech-savvy people are using cryptocurrencies, tokens and so on. And these people understand all the risk about losing everything they have on blockchain, losing the private keys and so on. Now we have an issue when there are too many retail people in the business, while still the technology is at the experimental stage. And then like the regulation kicks in to protect these consumers. And then it actually might stop innovation because you cannot get like your initial clients to test your product, even fail sometimes, improve the technology and so on.
Amazing. Right, what is your suggestion, Gabriel? And bear in mind that Brazil has a coming competition from an old country with a new approach named El Salvador.
Yes, not only El Salvador, I think. Yes. We are competing in regulatory arbitrage with the world. And, but what I think is sometimes we forget that regulators want to please us. They're not always the enemy. The thing is that we are not the only people in the room. So they have to please a lot of people. And that's basically what politics is about. Making your case a sensible case. For instance, Bitcoin was enabled by regulation. Don't shoot tomatoes at me. Not financial regulation, but telecommunication regulation. If telecommunication regulation didn't force open criterias and open technologies, and allowed for the existence of the internet. And that's not a given. There was a regulatory fight to look for the computer inquiries in the 60s and the 70s, and how the internet came to be. So the regulatory framework that allowed the internet to exist allowed Bitcoin to exist. So it's not always. So there's a balance between regulation and innovation in the sense that if you make a good case, and we can make a pretty good case. I mean, there are alternatives to KYC to avoid anti-money laundering using blockchain and AI, for instance. So that could make a much more interesting case. And then regulators would be pleased because they're worried about anti-money laundering. We just can pretend that there aren't people worried about anti-money laundering. So, and to push for that kind of innovation. So if we engage in a good dialogue, we can push for regulation that is made for blockchain. So that's the problem. Regulation is not made for blockchain-based business. And so we apply regulation made for other businesses, and therefore it hurts us. So in Brazil, we have, for instance, regulation is somewhat good because they made good regulation for financial services that also applies to blockchain. But we should have blockchain-based regulation that enables the best in it. And that's something that we will only accomplish if we engage with regulators. That's my take on it.
Right, thank you. So if I were to change my client's location almost every 2 years, chasing the next regulatory advances in each new country, and that changes back and forth, what would you suggest could be a good solution instead of being regulation chasers?
Actually, I want to say thank you to Gabriel because I was sharing his same thoughts, meaning that the regulator has many service providers to regulate. And sometimes regulation, when it's implemented, it's mostly issued as a one-size-fits-all. But then it's up to the market participants to educate and have dialogue and lobby with the regulator to make the regulation a bit more flexible. And more often than not, a regulator wants to please, wants to render the market an amicable one and a flexible one. But of course, market players need to keep in mind that there's not just one service provider, there are many. So I do agree with Gabriel in saying that we have to be a bit more mindful that regulation is important, but dialogue and communication with the regulator and sharing the experiences and the challenges of a particular market is important to have with the regulator and continue improving on having a flexible regulation and the compliance framework.
Amazing. Well, I have a small secret to share with you. I don't know if we all private sectors know that, but regulators do have meetings of their own globally, internationally. They meet with each other and say, they even have the FATF, which is the international regulators organization fighting anti-money laundering or fighting money laundering, actually. So my thought for you and a question for you guys, the panel, and you, the audience, is what if those regulators meet anyway and they have a common goal to minimize or to try to avoid totally any money laundering, to avoid financial pipes to help other money launderers, etc. And they have very common goals. They're quite identical, I would say, at least by the title. Why won't they, when they meet, try to have a unified blockchain-related, DLT, technology-related, crypto-related, maybe NFTs-related regulation, which could be in each country enacted by its own rules, but still will adhere to a common goal. More like the European directives, which stand kind of like above each country's law. Before you take that answer, I would like at least 2 people from the audience to stand if they ever have been in a company or know of a company that had to change its business model, change elements in its procedures just because regulation in its own country has changed. Has anyone experienced that? I see one hand up. Has anyone experienced? Yeah, of course, of course. And that is a pain, isn't it? Wouldn't you, we all would have liked to have a unified blockchain and crypto regulation and enforced better or worse in each country. What would you think of that suggestion? And bear in mind we have 10 seconds each. Sorry. Wahid, would you like to start?
Yeah, I agree. I mean, if you want to take baby steps, this global regulation might take time, but you want to get to the banks, and you want to start with a unified approach of banks with crypto exchanges.
Perfect. Would you like to say?
Like one thing is actually regarding the banks that they are private institutions and they can always choose to with whom to work. On the other hand, I think like it's very hard to get a unified solution because, for example, look to the United States of America. Every state has a different law in the state law. You look to the European Union. Every country also has like unique law. Even like you look to UAE, like every Emirate has a bit different law. So if you cannot do that in the countries, I doubt we can do that globally.
Perfect. What'd you say, Gabriel?
Well, I said in the 90s when countries were privatizing their utilities, that happened. That happened in telecom, in energy,
Yep.
and all that. So it already happened. It can happen again.
Amazing. What do you have to say?
I think it's good to keep oversight of the international landscape and the challenges and the changes, but focus should be given into one's country to improve and put a spotlight out there to be an example for other countries.
Right, thank you. So I think we could sum this up as a joint and common call for regulators, meaning regulators unite and give us an enabling and doable, feasible, and a careful and secured blockchain, unified in international blockchain regulation. Thank you very much for your questions and participation, your audience, and thank you, esteemed panel members, for your time and your expertise for the whole audience. Thank you.